Hello and welcome. This is Lode at Black Bear Dog Trading. It is a Friday, the 31st of January, the first month of the year of the new year gone. It'll be going really fast, so you better be prepared and ready to act and take action, or you will really miss the boat. That's it. This is the video I promised I was going to make about QDTE fund. Once it cleared my Fidelity account, and it has, as you can see right here, and even though I only started it with $20, I already made 22 cents profit. I like this fund a lot for the simple reason that they pay weekly dividends, and if you take advantage of reinvesting the dividends back into the account or into the fund, then you start taking advantage of compounding growth, which will only increase this even more rapidly. So I'm going to go into QDTE, what it is, and why I think it's a good thing to have in your investment portfolio. But before I do, I wanted to show you the Forex market as it has been the last few days. You've probably noticed that it has taken a lot of whipsaw over the past few days. There's a major one here with the euro down. Today, yet another one with the euro massive down. And well, there is a reason for it, why it happened this way. Let's see. Here's another big one right here. So, you know, in a one day span, 24-hour span, we had two massive dips, and there's a reason for that. And the first reason is that here we go. That where are we? Here we are. That the European Central Bank has decided that interest rates to cut interest rates to nearly two-year low, and that more easing is likely. That is the first blunder. It's a blunder only from the fact that they cut too much too fast, in my humble opinion, and this is the result of it. Interest rates go down, currencies go down. It's just how it is. The two correlate, and the more you cut, the more they drop. Of course, by next week or so, or maybe even the week after, this will start balancing out again. But that is the immediate effect of what you get when you make massive cuts like that in the interest rate. On top of that, she also said openly that she is not going to support Bitcoin in any of the European banks. And here is the message on this one. It's an image I took yesterday. Is dated the 1st of, this is European date format, so it's day, month, year. Well, we have month, day, year, so it's the 30th of January. That was also posted yesterday, and it clearly says by the same lady, Christine Lagarde, that ECB is not allowing or is not going to add Bitcoin in any European Union country. There are quite a few countries in there. That means most of Western Europe is not going to be bothered with Bitcoin, or won't have Bitcoin as a tradable currency, or as a usable currency. And of course, that too added to the massive drop that we got to see right here in Forex trading. So I just wanted to share why we had a certain dip. It can be explained, now you know why. So now I want to go and talk a little bit about NVIDIA. NVIDIA has taken a slight nosedive. It went up a little bit. It is now gradually readjusting itself, and we're going to go and I'm going to show you why it is better to own index funds as opposed, or ETF funds, as opposed to having actual independent stocks. I told you that I don't have independent stocks, individual stocks. I have index funds. And here we have FSELX, which is my primary index fund for technology. It includes NVIDIA, it includes Taiwan Semiconductors, it includes AMD, and yet you see FSELX went up with over 2% today, while NVIDIA went down by 72%, 0.7269, back 70%, 0.70% as of today. So the fact is that an index fund has more opportunity to stay up or at least bounce back easier and faster because of the multitude of stocks that are comprised within the index fund. While in the case of NVIDIA, it's an individual stock and it has to quote unquote fight for itself by itself to gain back market share. So here's my reason why I only have funds. I do not have individual stocks, and I explained yesterday why. Here is the proof that what I said is exactly why. So, but don't worry, I think NVIDIA will bounce back, and I think it's already getting a push because today it's been announced that OpenAI is going to launch O3 model, 03 model, O3 model, sorry, and it's going to give it for free as a quote-unquote direct competition against DeepSeek. Of course, NVIDIA is immediately affected by how well this is received, and if this is a positive thing, NVIDIA will go up. If this is not so well received, then NVIDIA will even go deeper in the trenches. So that's why I read headlines. I don't go deeper into articles. I merely check headlines and give me some idea of what is going on in the markets. And so I have somewhat of a thought where I need to be with my stocks and with my trading, and you know what I need to keep an eye out for, and so on and so forth. Enough said about that. Let's go to QDT. As I showed you already in my portfolio, QDT, I am currently up 1.2%. I mean, on $20, that's pretty darn good. I already got a payout of 16 cents. The difference between the two minus fees comes to 22 cents. I mean, imagine you start have thousands of dollars in there, hundreds of thousands in there, dollars in there, you'll do very well. So what exactly is QDT? Well, QDT is stock that is owned by Roundhill Innovation, and it is the 100 small cap in, no, I'm sorry, it is 100 large cap, 100 large cap of the NASDAQ. The company Roundhill actually owns these stocks, and now they place covered calls on them, which are option calls, and they trade every day as close into the money or on the money as they can, giving them high profit ratios when successful, and they then share these profit ratios with their investors. So this is how this works. Then by you managing the dividends in your portfolio to automatically being reinvested within QDTE, you will then get to take advantage of what's called compound growth. So here's a brief scenario. It has a dividend yield right now of 35.02% per year, which comes down to 14.10% per share in just a year's time. There is no company out there that pays this high a dividend. Again, it's because they do options trading on stocks they own. and trading options on stocks you own is labeled covered call. So the way that this works for the company is that if they exceed strike price by a little, then they have profit. If they don't make the strike price, they agree to sell or the shares that they put up in the options for a specific price that they agreed on. So for us, it's very nice to have because we benefit tremendously. Just a couple of days ago, this was at 36. Now it's already at 40. So it's really good. And as you can see right here, they haven't paid yet, but this will be next week. You get another payout again. As of now, here we are. You see how they every week they pay. Look at that. It's every single week they have a payment. So it's pretty nice. Now, of course, the high interest rate that you earn or the high dividend payout that you earn clearly has some risk associated to it, which is, you know, if the company Round Hill does not do exceptionally well or they have more losing options than winning options, of course, then that is going to dip into your dividend yield and you will make less, potentially even lose money. This is particularly the case that their value will go down as they start owning less and less shares of the NASDAQ and not have the ability to do more covered calls for larger shares. Now, there is a counter against this, which is much more conservative, and you don't, the potential that you may see prices dip rapidly is not that dreadfully as it could be with QDTE, and that one is called IQQQ. And when we look at this one, here you are, it's roughly about the same price, it's a little higher. The dividend they pay is only $3.10 per year, and the yield they offer is 7.11% per year. By the way, it's $3.10 per year per share. So that is remarkably a lot less. This, like the QDTE, tracks the NASDAQ 100 large, but it's much more conservative. And that is because this company, ProShares, will also do covered calls, but they will do it out of the money or at a further time away. If you're not too familiar with covered calls, you can easily read up on that. Like Investopedia.com has a real nice article about it, or you can go to YouTube and just type covered calls, and you will absolutely find plenty of videos that explain this to you. Now, as far as for growing your money and building more wealth a little bit faster, nothing happens overnight, but a little quicker, and having higher dividends, and basically increasing your financial stature a little bit quicker. QDTE is a really good option to have as part of your portfolio. It's the reason why I have it. It's also the reason why I am using it. I like high dividend income. I'm a little bit of a risk taker, not over the top, but I'm not one of those, I'll just play it safe, I'll just play it conservative. It's not really my style. I like a little risk, and it makes me know I'm alive. And that is it. So this is what it is about QDTE. One more thing I'd like you to know, that this is a new fund. It was incepted on March 7, 2024, so it's not even a year old. The asset in dollars isn't at that much. It's not even a billion, but I think the company is growing, and I think what they're doing so far is pretty solid. Of course, if you go back, you see that they have some, up, 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 and then here they had a down, but now they're starting to slowly go back up again. So, I mean, it's everyone individual's choice, but as for me, I like this as part of my portfolio because I can earn some really good dividends quite quickly. And here you go. I'm glad I scrolled down. Roundhill in his QDT covered calls has now surpassed a billion in its value. So where it still lists here as being 754 million, it is now actually a billion. And it has also, here we go, and it's also outperforming while offering weekly distributions. So on top of it is doing better than anticipated. Yet another two reasons why I like to keep QDTE as part of my profile. So that's all there is to it about this particular index fund. And I know I kind of went through it a little quickly, but if you want to do your own research, simply go to stockanalysis.com and in the search box type in QDTE and you'll get all the information that I have on screen here. So, and you can do your own research. Like I said, I never click on the links to go deeper into the articles. I literally just glance over it. And for me, that's all the information I need to know. So that's it for now. Have a wonderful weekend. Be safe and God bless.